Travel stocks are a hot group right now after 2024 delivered strong gains for airlines, cruise ship operators, and hotels and booking sites. Meanwhile, stocks in each of the three groups also had impressive rallies. Savvy investors who were paying attention witnessed gains of over 75% collectively for airlines in the last 5 months of 2024. Meanwhile, the leisure services industry group, home to major cruise lines like Norwegian Cruise Line Holdings, Royal Caribbean, and Carnival, rallied 18% from August through the end of the year.
And there's also the travel booking industry group, which includes Expedia, Booking Holdings, Trip.com, and many others.
This group soared over 49% in the last 5 months of 2024. As 2025 gets underway, investors are digesting an uncertain macroeconomic picture and a volatile market environment. So, what does that mean for travel stocks going forward? Let's take a deeper dive into the three key segments of the travel industry: airlines, cruise lines, and hotel and lodging stocks. IBD Markets writer Harrison Miller joins me to discuss the current headwinds and tailwinds facing each group and what it means for investors, starting with airline stocks. Harrison, thank you so much for taking the time to talk to me about travel stocks. So my first question is, what are some of the tailwinds that are helping airlines as we've sort of begun 2025?
So a lot of it has to do with this strong demand that we're seeing from a lot of customers. They still have a lot of spending money and, a real desire to travel. Some of that has still been accelerating through the fourth quarter and is going into 2025, which is really providing, a strong boost to the industry. And on top of that, many airlines have finally started to equalize their supply demand balance coming out of the coronavirus pandemic.
What Harrison is referring to is the industry's ongoing struggle for airlines to adequately match supply with demand. This has been especially challenging lately as demands have changed in unexpected directions over the last 5 years, starting with the pandemic. When COVID-19 broke out in the spring of 2020, everything shut down, and airlines only provided minimal flying in order to minimize their daily cash burn. Then, several months later, when the vaccines became widely available, travel began ramping up massively and fast, and this led to many airlines struggling to find enough equipment and flight crews to meet that demand. In addition to that, the ongoing risk is that demand can cool fairly quickly for airlines, at a much quicker rate than they can reduce capacity. Unfortunately, it takes quite a while to adjust capacity and flight schedules and to repurpose flight crews and crew bases. But what's been encouraging is that airlines have reduced oversupply quickly in late 2024 to match demand and have been managing these gyrations fairly well.
So it's created this great environment where a lot of people want to travel. They have the equipment and flight crews in place to meet that demand, and fuel prices are moderating. So it's coming together in, a great sort of scenario for the industry. And it's further emphasized by the fourth quarter earning results that we've seen. Delta in their earnings noted that 2024 was a record financial year for them, and their guidance was really, really strong. United also saw record profits in their fourth quarter report with strong demand across all their offerings. Premium revenue increased 10% from last year, and their economy class revenue also jumped 20%. So they're seeing great growth across all their business.
Talked about the positives. So, what are some of the challenges that the industry now is facing?
That kind of depends on the airline itself. The Deltas and Uniteds, they're in a great spot because their main concerns will just be any increases to fuel prices or if there's any sort of slowdown in demand. But overall, things look positive for them. American also falls into that group, but they rolled out a new loyalty program to try to keep customers away from booking through travel sites. Well, that in turn caused customers to turn to some rivals instead. So they have a little bit of catching up to do in that space, but other than that, they're looking solid. The regional airlines and the discount carriers, they have a bit more work because they don't quite have the same resources as these legacy airlines. So some of them have started to pull back on capacity or decide to pull out of underperforming hubs. And some, like Southwest, are exploring more premium perks and offerings to see if they can, entice some higher spending customers. Now, Analysts are a bit divided on if those premium offers will actually help, because that's not quite their wheelhouse, but that's to be seen.
So pivoting to cruises, this is supposedly going to be a golden era for cruises heading into 2025. Can you tell me a little bit more about what that means?
Cruise vacations, they're seeing a lot of strong demand as well. Bookings and reservations are at record levels. We started seeing that already in 2024, and many companies are already reporting that 2025 is halfway or more booked already. Historically, cruise lines, the industry grew capacity at around 6% every year. Well, analysts are expecting about 2% growth between 2026 and 2028. So that should allow more room for yields to grow. Essentially, low supply growth forecasts with high demand and good pricing all around, similar to what we're seeing with airlines.
There are three, major cruise lines. We've got Royal Caribbean, Norwegian, and Carnival, and there are others, but those are sort of the big three. Have you noticed any particular advantages or outperformance in any one of the three?
Royal Caribbean stock has been the clear winner out of the three. They had a much larger rally, but a lot of that is because Carnival and Norwegian Cruise Line holding shares, they, had a much larger drop from their historic highs. So RCL stock is pushing up to record highs again. CCL and NCLH, they've still got some room to go. But interestingly, Royal, they announced their Q4 earnings on January 28th, which was a solid beat. But they also announced new river cruises through their Celebrity Cruise subsidiary. So those are going to launch in 2027, and bookings begin this year. And they're actually going to be maybe touching the toes of smaller cruise lines like Viking Cruises. So similar to what we've seen with airlines again, where some of the United, Delta's larger players in the space are taking up the niche of some of the smaller players. We'll see how that translates to additional growth for them. CEO Jason Liberty also noted that about half of their guests intend to take a river cruise vacation, so they do expect some demand there.
So it seems like between whether you're traveling by air, traveling by sea, there are definitely parallels between those two industries in terms of what's going on. All right, so let's pivot to lodging, the third and final part of this triad. So reservations at Expedia, Booking Holdings, and Trip.com have all topped analyst estimates for the recent quarters. So what's kind of been behind that recent strength?
Booking, Expedia, and Trip.com have all seen a lot of resilience in travel from China and Europe, particularly in the October month with China's National Day travel holiday. Their week-long celebration actually saw bookings outpace pre-pandemic levels. So they're finally really emerging from coronavirus pandemic. And once again, it's just taken a little bit of time, but we're finally there. And with these reservation sites as well, they also have to rely on the airlines and cruises. So, they're a bit delayed when it comes to actually recovering.
And in September, Jefferies projected a worldwide room nights growth for online travel agencies would slow. So what else is kind of behind that slowdown, and how might it kind of affect this industry, this part of the industry?
It's not quite a slowdown. It's more of a normalization of trends because once again, we're comparing to the coronavirus pandemic. And so, we've seen triple digit gains in these quarters coming out of it, but now things are finally starting to normalize. So, analysts are still expecting growth, but it won't be those eye popping numbers we've come used to in the last few years.
On October 30th, for its 2024 third quarter results, Booking.com reported double-digit growth in room nights booked across Asia, with major improvements in Europe. The company also noted stable growth in its U.S. business. And CEO Glenn Fogel said its U.S. bookings continue to outpace the domestic accommodation industry. Meanwhile, Expedia in November finally increased its fiscal year bookings outlook after 3 consecutive quarters of lower guidance. Expedia's third quarter earnings beat also delivered record room nights growth in online travel, which suggests success in recent product and marketing initiatives. So while the hotel side of the industry is certainly showing some potential for growth, airlines and cruises seem to be the more compelling areas for investors to focus on at this time. But as Harrison mentioned, their performance can be influenced by fuel prices and, of course, customer demand.